What's going on, you guys? My name is Danielle, and here on this channel, we talk about stock market investing with a focus in Canadian growth stocks. And two of my favorite Canadian growth stocks on this channel right now are Health Technologies as well as CloudMD. However, recently there hasn't been much news regarding these two companies, which is why I haven't done too much coverage on them. And I think there's a good reason as to why these companies haven't been putting out like blockbuster news articles. And I'm not going to make you wait to the end of this video, and here's the reason why. So looking at how these companies have progressed, recently both of them raised quite a large amount of money. So Health Technologies, they closed a round of financing of around $80 million. In CloudMD, they closed a round of financing worth around $37 million. And looking at CloudMD and the amount of cash that they had on hand, in the previous quarter reported September 30th, it was around $33.9 million. So this means that CloudMD's total cash position sits somewhere around $70 to $80 million, while Well Health sits somewhere around $100 million. So both these companies have a lot of cash. And when you think about it from management's point of view, the only point for them to boost up their stock price by releasing good news over and over again is in order to raise funds. Because right now it doesn't do them any good if they're not interested in raising funds to try to increase their stock price. So thinking about it from their point of view, it totally makes sense because right now both these companies have a ton of cash, and I think that they're allowing their stock price to sort of cool down and stay steady. And when they need to raise more cash, they're going to be pumping out a lot more news and probably doing more acquisitions, getting investors more excited about the business, and rightly so. As an investor, when you're looking at a business who's acquiring companies left and right, 5 in a total of like 3 months, then this is a business that you want to be invested in, and it creates a lot of investor hype. But right now, as you can see, not many acquisitions are happening for both these companies, and you could also say it's a result of Christmas break happening, so everything was winding down. This doesn't mean that these companies aren't doing anything. In fact, they're probably working away just as hard as ever. And they may be using this time to develop internal technology, seek out new opportunities instead of trying to find ways to generate more PR. Perhaps they're filling up their pipeline of companies that they could be acquiring and not yet entering into these agreements until they're looking to raise more cash, where they end up closing 5 or 6 of these deals in a row, causing more investor hype, and then raising the stock price and then being able to raise another round of financing. I have no doubt in my mind that the trends for telehealth are going to be positive going forwards, as a lot of people were forced to use the service over the past year. As the whole pandemic caused the world to shut down and people were afraid to go outside, and when people turned to telemedicine like me myself, I honestly found the experience just as seamless as going to a doctor, actually if not better. The fact that I can book an appointment and get an appointment the same day is miles or 10 times better than what my doctor offers. And when I was reading this book called 0 to 1, we have to look for technology or new innovations that create a 10x on old processes. So what telehealth really does, it decreases the amount of time that you have to wait by about 10x before you can get a doctor's appointment, in my experience. Like the time to drive there or the time to pick up your kids, the waiting room time, as well as afterwards when you have to do any sort of final checkup or booking the next appointment with the receptionist. So all this time is saved there as well. So I see a huge 10x improvement that telehealth gives, and no, it's not for everything, but it's a great first line of triage for the medical space. And for this reason, I think that telehealth is here to stay and is only going to get bigger within the next 5 to 10 years. In the short term, after the whole pandemic's over, we may see a decline in telehealth usage. However, the long-term trends are intact, and 2020 only proved to accelerate that. Before 2020, people were a little bit more skeptical about telehealth just because you visiting the doctor is for a physical examination typically, and people didn't think it could be done online. But now that 2020 happened and people were forced to use telehealth, all these preconceived notions people had back in 2019 and before about telehealth, those are probably all wiped away, and people have realized that telehealth can address a lot of the basic healthcare problems people have, and it's a lot shorter than going to the doctor's office. If you're interested in seeing when I'm buying Health Technologies or when I add to my CloudMD position, be sure to check out my Patreon page where you can sign up there and get real-time stock buy and sells from my Wealthsimple account, as well as my private question account that I've never revealed on this channel. That account's valued at over $200,000 today, so if you're interested in that, check out the Patreon link down in the description. But for now, let's jump over to my computer and see some of the latest news from these two companies. So we're here on the news release page of Health Technologies, and you can see for 2021, they've had one news article here that they announced two new acquisitions into the Well EMR group, as well as they completed the acquisition of Adrocare, which was announced previously as well. So not much news for 2021, but in 2020, we can see that the news kind of dropped off at the end of the year. Not too many acquisitions, just the Adrocare one that was announced. They also provided a corporate update demonstrating acceleration of revenues, which I talked about in a previous video. You can check it out in the top right corner. So let's just jump back to 2021 and check out this article here. So here in this article, we can see that Well announced its acquisition of 100% of this company here called Open Health Software Solutions. It's an Oscar service provider to medical clinics primarily located in Ontario. So you can see here that they're expanding out of BC and acquiring a lot more Ontario companies recently, which is a great move for Health Technologies just because Ontario is the largest province in Canada and BC is the second largest one. So they're going to be in the two largest provinces in Canada. And that's obviously where they want to start to be able to get the best traction. They've also entered into a customer purchase agreement with a certified non-Oscar EMR provider to migrate its clinics and physicians onto Oscar Pro. So they're converting people who are using non-Oscar EMR products onto their Oscar platform. And this migration is expected to add several hundred more clinics to Well's EMR network. Also, the next bullet point here is Well EMR Group has a record quarter in Q4 2020, growing more than 100% year over year compared to Q4 of the previous year. And they achieved over a 25% EBITDA margin. They also show that the end of the year with approximately 2,200 clinics and over 10,700 physicians as of December 31st, 2020. Open Health and the non-Oscar EMR provider, which we talked about earlier up here, are expected to be mostly consolidated into Well's EMR group during the first half of 2021. So these two acquisitions aren't in the stat of 2,200 clinics and 10,700 physicians. Another thing that I want to highlight here for you guys who are investors in Well Health or looking into Well Health is that they're not a telehealth company. They're a company that's focused on consolidating and modernizing clinical and digital assets within the healthcare sector. Telehealth is one of their focuses, but it's not their main focus. It was just the biggest focus as of the pandemic just because everything shut down and it was a needed service, which is why everyone thought Well Health was a telehealth clinic because a lot of us YouTubers talked about it like a telehealth service only. But they have other digital assets which I think are just as valuable, if not more valuable to the brand. And I think that this also allows Well Health to branch outside the telemedicine space and capture all the digital innovation that's happening in health. And one thing about the healthcare sector is that it's one of the last sectors to be penetrated by technology. And the reason why is usually these sectors like aviation and healthcare are slow to adopt technology because there's a great risk when they introduce new things to the systems. So for these sectors which actually deal with human lives and a lot with safety, these are the sectors that generally move a lot slower. And the fact that now there's a lot more innovation in the healthcare space shows that this sector is ready to be digitized as well as innovated. And Well Health is one of the first movers in this sector, and I think that they have a great chance at being one of the key players, if not the most dominant player in the Canadian health tech space. So not just telehealth, but the health tech space. So everything to do with technology in the healthcare space. Before we move on to CloudMD, take note that Well Health has around 2,200 clinics in their system, and we'll compare that to CloudMD's. So right away, we're going to go to CloudMD's website, and we can see that they currently service a combined ecosystem of over 500 clinics and almost 4,000 licensed practitioners and 8 million registered patients. So the key stat here is 500 clinics versus Well's 2,200 clinics, and their 4,000 licensed practitioners versus Well's 10,700 physicians. So you can see that Well Health in terms of clinics, they're about 4 times larger than CloudMD, and they have more than double the amount of physicians on their app or on their platform. And I think that right now with the whole digital health space, Scale is what you want because people go to a platform with more physicians because there's more choice. So Well Health has that, and I think that when they continue to grow their platform, they're going to attract more and more physicians, and this is going to go up exponentially. CloudMD is a smaller player, so I think they're going to struggle a bit more to capture market share because Well is a dominant player, and most people like to live on the dominant player's platform. Unless they can find a way to get physicians on both platforms, I'd say Well Health Technologies is going to be the best platform out of these two. And I know some of you guys are thinking in the back of your head, what about Telus and Babylon Health? And yes, Telus and Babylon Health, they do have more physicians on there. However, I think the innovation in Telus, just with all the bureaucracies and politics, is going to be a lot slower than Well Health Technologies as well as CloudMD. These companies that we're talking about here are a lot smaller and more nimble, and they can do things that Telus can't do. They may not be able to provide as much cash as Telus can, but I think that Telus being a huge, big, giant telecom company, it's a lot more difficult for them to move, as well as it's going to take a lot of investment for Telus to actually see some material impact from the telehealth business on their bottom line. So I think that from that standpoint, I really like Well Health Technologies and CloudMD over Telus just because they're smaller companies, they're more agile, and they can move and adopt a lot quicker than Telus can. Also with Well Health Technologies, I forgot to mention, one thing I love about them is their management team. So we're here on the management page and we can see the CEO here. He worked for TO Networks and was the founder of this business, which was acquired by PayPal for about $304 million back in 2017. So he's already run a successful company that was acquired by PayPal, which is a massive fintech company. Then on top of that, his chief operating officer also worked for TO Networks as the COO. So these guys have a great synergy from TO Networks. They built a successful company, as well as the senior vice president in strategic partnerships and marketing also worked for TO Networks. And there may be one or two other members here on their management team that have worked on TO. So you can see that the TO team has moved over to the Well Health Technologies company, and the fact that they've worked together before gives me as an investor more confidence that they can execute on their plans. They also have a chief medical officer with a ton of experience in the healthcare space. Their chief information officer also has a lot of experience. He currently sits on the McMaster board of directors for Oscar EMR, and he also was a co-founder of Kai Innovations, which is another health tech company. So they don't have a lack of health tech experience. They have quite a bit on the board, mixed with also a strong team, which came from another company that successfully sold out to PayPal. Now back to CloudMD, we can see that the latest piece of news that they gave was December 17th, which is about a month ago. So clearly this company is not pushing out much news nowadays. And again, that's probably because they don't need any cash, so they don't need to announce any sort of major updates for investors to try to boost the stock price. So the last piece of news is that they acquired this healthcare data integration and cybersecurity company. So that's obviously needed for the business because they are dealing with digital innovations. So cybersecurity is super important, especially in the medical space. We can see in other news that they're pushing more towards the mental health space, which I haven't seen much from Well Health's side. So this may be the differentiator between CloudMD and Well Health. This is how CloudMD is trying to differentiate itself from Well Health Technologies and dive more into the mental health space. Other than that, there weren't any other major acquisitions that they announced. They just closed a few acquisitions in November, and they also announced their quarterly revenues of around $3.4 million, which was a record. However, investors saw that otherwise, and they probably were expecting a bit more, which is ultimately why the stock price ended up dropping. The final thing I want to go over in this video is to solidify the fact that Well Health is more of a digital health tech innovations company versus CloudMD, which they branded themselves as more of a telemedicine company. So here we can see on the front page of Well Health Technologies, they aim to positively impact health outcomes by leveraging technology to empower and support patients and doctors. So their vision here is that they believe the future of primary healthcare is heavily influenced by technology, not just telemedicine, with a greater immersion in digital experiences for both patients and physicians. They see that they have a role to play in supporting these enhanced experiences by leveraging their efforts to reduce fragmentation and enhance digital interoperability. So basically being able to operate on the digital space as well as in person and just have those experiences very seamless. Maybe one day you have a telemedicine appointment, the next day you have a physical doctor's appointment. Just having just a coherent experience within that for their customers. Versus if we go into CloudMD, they can see the first line that you get hit with is get virtual medical care on your schedule and from any device, including your phone, desktop, and tablet. Instantly connect with a licensed Canadian doctor. So it looks like CloudMD has sort of peg-holed themselves as a virtual medicine company and not really a synergy between clinics as well as virtual medicine. But we did see that they have about 400 or 500 clinics on their platform, so I think that they might need to do some rebranding in order to position themselves not just in telemedicine, but in the whole digital health space, which is a much bigger market. So those are my thoughts on both these companies right now as to what's happening in them in the background. And for you guys who are long-term investors, just like me, I'm going to be holding my investments and I'm sure that you guys are as well. For those of you guys who are panicking a bit and bought in around the $8 mark and saw it drop down to $7, well health, as well as for CloudMD buying in around $3 and seeing it drop to $2.30, you got to remember these companies right now are just taking this time to breathe and to use it for internal development rather than generating good news out there for the public. If you enjoyed this video, leave a thumbs up down below, as well as subscribe to my channel if you're new here, and here are the 2 videos on Health Technologies if you're interested in that. If you're there, I'll see you there. If not, keep up the grind and have a great day.